please, for the love of God, go with the most boring person you know. Boring beats exciting every single day.
I love
it
it.
doesn't matter what investment it is. Every person that is in investment, anything that is exciting or any person that is flashy, 100% guarantee that you are going to find out the hard way that you've lost your money, whether it's in 6 months or 6 years.
From my personal experience, a few years back, we got into a deal, 36% return a year, 3% a month. And it was going very well for 6 months until finally we get the SEC email saying it's a Ponzi scheme.
Holy crap. Look, the only advice I give people all the time is...
I love that. Fantastic advice. Welcome to the Doctors Investor Club podcast, where physicians and dentists come together to elevate their mindset, build their assets, and create a lasting legacy. I'm your host, Dr. Kyle Stevenson. After years in the OR, I've realized wealth is not just about high income. It's about ownership, freedom, and using your money with purpose. Here at the Doctors Investor Club, we share the strategies the wealthy already know: owning a business, real estate investing, becoming your own banker, and intentional investing. Each week, we sit down with entrepreneurs, investors, and physicians who've stepped off the hamster wheel and are building wealth that outlives them. Because at the end of the day, it's not about how much you make, it's about how much you keep and the impact you leave behind. Let's get into today's episode. All right, welcome back to the Doctors Investor Club podcast. Today's guest brings a perspective that's especially relevant to our audience. Omar Khan is a partner at Boardwalk Wealth, a real estate investment company focused on helping investors participate in institutional quality real estate opportunities. What makes today's conversation unique is that Omar's wife is a physician. So he doesn't just work with doctors as investors. He lives firsthand the realities of medical careers, time constraints, income volatility, and the desire for thoughtful, passive wealth building strategies. Today, we're going to talk about how physicians actually invest their money, why real estate plays a distinct role for doctors, and how Boardwalk Wealth approaches partnerships differently than traditional financial firms. Omar, welcome to the show, sir.
Hey, thank you. It only took the birth of your child for us to finally connect over a podcast.
My goodness, I know. Sorry about that. It's been mayhem, but
Congratulations.
We did it. We appreciate it. It's been exciting. It's been fun. My mother-in-law has been here for the last 2 weeks, which has been plenty of help, which is awesome. And so now it's just us, and it's figuring it out, right?
Yeah. All right. Well, let's go. Let's get into it.
Let's get into it. So, yeah, give us your background if you don't mind. I know that you were born in Canada, I believe.
I was born in Dubai. I grew up in Pakistan. I went to school in Canada.
Oh, my gosh. Okay. Yeah. Give us the whole background.
Yeah, I took the scenic route here, basically.
Yes.
Right. And then I worked in investment banking, portfolio management within oil and gas and otherwise financial services. And then I met my wife. She was finishing up a residency in SUNY upstate New York, basically. So, I mean, she was, I think, in her second year at the time, 3-year residency. So, around the time we started getting married, there's 2 questions I asked, apart from many other questions, were, do you want to have kids? She's like, yes. I was like, great, because I wanted to have kids, and luckily we're blessed with kids. And the other thing was, I was like, look, I hope it's not a deal breaker for you, but I don't want to live anywhere cold again ever. And she was like, you know what, as luck would have it, I don't want to live anywhere cold again as well.
Nice.
So that's how we made our way. She's from upstate New York. I was in Calgary at the time. To Texas. I didn't know a soul here, didn't know a person here, but I'd been doing finance for a very long period of time. So I had all that Rolodex and everything. And that's how we came to the US. Or rather, I came to the US. She was already here.
Yeah, that's great. And what specialty is your wife in?
She's pediatrics. So fun fact, I joke with her, don't be a pediatrician. You're going to do the same amount of work and make like half or a third of the money. So any doctors out there, hopefully you're reading this before or hearing this before you get into residency. It's a calling, like all being a physician is a calling. Yep. Man, it's a lot of work to get paid, not a lot of money.
Right. I talk to residents about that all the time. Medical students, that shadow. That's part of it, right? It's part of it. It's like, yeah, you may love something, but make sure you're getting, what you're getting paid for that. So
yeah, I think it also, as you were mentioning about the wife thing and living, it also then eventually it bleeds into, especially, look, depending on which partner is the primary breadwinner. And I know a lot of people get upset if you say this kind of thing these days. But look, if you want to have a family, somebody has to decide who the primary breadwinner is, right? By and large. And every marriage is different. Every relationship is different. Yeah, these things are very important because you don't want to go through all these years of education, training, and you have to be at the peak of your performance since like elementary school, right? And then be under so much student debt and be struggling. I mean, that's a lot of stress to add on your shoulders.
Exactly. Yep. And I mean, to your point, she got married to somebody very successful. So, the financial aspect of it doesn't really matter as much, right? My sister-in-law was just here. She's an ER doc. She now works part-time because her husband, they own a business, and, so she doesn't have to work a ton, but she's never going to be burnt out because she's like, I can stop working if I want to, but I love it.
My wife loves the ER part, or used to. I don't know. She still loves it because she's like, it's so high. She's a type A type person. It's high intensity. You get in, things are. I mean, it's carnage everywhere, basically, right? But she's like, but then you're done. Exactly. Whereas a lot of physicians, I mean, pediatrics, internal medicine, all these, you kind of bring your work home, right? And then it's just a whole part of your life. She loved the ER part. She's like, in another life, I might have been an ER or tried.
She could always go back. PDR. All right. So you were in finance. What led you to real estate investing? I love real estate investing. I think a lot of listeners do. But what led you to it?
So look, there's a couple of reasons there. Number one was I'm from an entrepreneurial family. So there was always that itch. And I always knew that something along the lines would happen, not real estate, but just generally something entrepreneurial, number one. Now, I also had about a decade of investment banking, private equity, finance experience at a very high level, sell side and buy side. Sell side is investment banking, advisory. Buy side is you're actually at the client who's then getting the investment banking advice, right? So I had a great network. So it was, yes, I had the itch and the family background, but you also need skill, right? Because just saying I want to do something, it's like me saying I want to play in the NBA. I mean, when you have a 1 foot vertical, it's not going to really work out, right? So having the desire and the skill was very important. But look, frankly, when we got married, I was, by God's grace, making good money, right? You're in finance, you make good money. She's a physician. She's, compared to the average person, we're making good money. And in earlier life, I was in portfolio management because I'm a CFA charter holder. And when I thought to myself, look, I'm 30, she's 29. I projected our incomes and I said, okay, let's assume our incomes don't even grow that much. They're just whatever, 2-3% a year for the next 35 years. And then and it's a very simple exercise. Like, you back out your taxes, you back out reasonable expenses, you want to travel, and then you want to go investing and saving. And no matter how many scenarios I ran, the big leakage in my bucket was always taxes, no matter what I did. And it wasn't like, $10, $20, $30,000. It starts coming into high six figures very quickly. Right. And it escalates from there on end. Right. So, now somebody listening to this might be saying, oh, I have the world's smallest violin playing for you. OK, great. Because so many people are struggling. Totally understand. But for me, it is still a problem. And obviously, I'm not the only one. I have friends that are surgeons, cardiologists, ENTs. I mean, the households are paying a couple $100,000 in taxes. And what I realized when I looked at that was that no matter what I did, because the whole idea is, hey, work harder, get a promotion, blah, 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 just running faster on the hamster wheel. No matter what I did, that leakage at the top of my bucket, which is taxes, that was the biggest thing. That was the biggest drain on my wealth generation. Right? As you know, a high-income W-2 employee in America is in the worst tax position. I don't care what you say, what you tell me, you have the highest tax burden. So number one was changing my tax burden and status into, say, hopefully making the same income, but into a different bucket. So now I have somewhat more control over my taxes. That was a real spark, right? But concurrently, I always had the entrepreneurial bug. So I started looking at various private equity ventures, real estate, hospitality, VCs, and saying, okay, well, I'm in the greatest country in the world. I might as well be doing something here. And I had a good network and Rolodex for all my years in finance. So I wanted something that was very fragmented. Fragmented means like 2 or 3 players don't control the whole market. number one. Number two, I wanted something that was highly relationship based, because I had seen technology in financial services and oil and gas replace a lot of senior executives at the wrong time. They're like 50, their kids are going to college, they've got a mortgage. Now they're dead weight and they're replaced. So I wanted a very relationship heavy, whatever I did. And lastly, I wanted something which had a lot of tax write-offs for this exact problem that I was telling you about. Man, I looked around. I went to private equity, venture capital, but then even in real estate, I looked at hospitality, industrial, retail. And what I found was, for me, in my situation at least, the best combination of tax write-offs, scalability, relationships, fragmentation in the market was within multifamily. So we started off about 8-10 years ago. We've done 800 million in transactions, 26.6% IRR, 2x equity multiple. But what I always tell people is, look, just merely having a problem is not enough. If you don't have the corresponding skill set to that problem, you're just another guy and girl with a problem. So luckily for me, I was in a situation where I had a problem. I had an exact skill set, luckily, straight luck, that matched trying to solve that problem. But I also had a very cooperative and supportive spouse. Because I have many friends of mine. I totally understand how lucky I am. I have many friends of mine, they want to do this. They've been trying to do this. The relationship with the partner does not allow them the luxury to do this. Right? Or they're at a stage in life where they've got 2-3 kids, they're older. And you know this, the more everybody says, I'm going to do it 6 months from now, 1 year from now. And then that becomes 5 or 10 years. Yeah, so a very long-winded answer to your question. Sorry.
Nope, I love that answer. And honestly, we could just stop the podcast there, because taxes is the biggest cripple of all of our lives. Like you're preaching to the choir, and especially as physicians, to your point, right? High level W-2, high income W-2 employees. It's that Robert Kiyosaki, left side of the quadrant. We're paying the most in taxes. And I get docs reach out to me all the time. Hey, doc, I'm paying $750,000 in taxes this year. I literally just did surgery on one of my colleagues this past week on his wife, excuse me. And we talked about her surgery for 2 minutes. We talked about real estate and finances for the next half hour, because he's just like, man, I need to understand this stuff because I'm getting, killed on taxes. So,
my brother, it might be less painful to have that surgery than to pay $750,000 in taxes every year.
Yep.
Maybe more than anything else.
That's insane. Yeah, it really is. So that's why I've gotten into, real estate. And, it's like, I did the whole, buy your own properties and be the landlord and thinking that that's the way to do it. It's not. It's brutal. And, I did everything I could to get out of those and invest with smart people like yourself who have been doing this for, like you said, 8 to 10 years, giving good, returns and just understanding, how it all works. So, and real quick on that, just with your experience, I kind of was compare real quick, because you said you got into this 8-10 years ago, which was before, before 2020, and 2022 was a rough year, I know, for a lot of investors. But, from 2010 to 2019, 2020, like almost every real estate guy was doing well, right? It was a bull market. Everybody was doing well. And then really people got caught with their pants down when 2022 came and they weren't doing good deals, or they had, variable debt or whatever it is, a variable rate debt. So how did you guys fight through, some of those tumultuous times these last, 4 to 6 years? And how has your experience helped you out through that?
So look, first of all, what I'm going to say is anybody that has a company with a decent sized portfolio, real estate, at least in our line of work, that number one tells any investor right now they have no trouble or have had no trouble is straight up line. Guys, I'm an operator. I do this for a living. I've done 800 million in transactions. I can tell you, every single real estate person, Blackstone, all the way down to Jim Bob working out of his garage, all have a problem. Okay. Now, this is where this whole aspect of you just got to be a good real estate guy, this shtick doesn't cut it anymore. This used to work 20 years ago. Now, if you're not a financial guy, you're not a real estate guy, you're not an operations guy, and you don't, guy or girl, and you don't have all of these things in one package as a principal, as the head of the company. Now, you need to have a team, and I'm very blessed to have a good team. You are going to be killed. So many of my peers right now are going through bankruptcies and foreclosures. So number one, having financial sophistication really saved us, because there was a good 3-year period where my wife can tell people this all the time. I would get up in the middle of the night and I would run the math literally on my pad. Because, and again, real estate math isn't terribly complex. Don't worry when people show you these fancy spreadsheets, the math is not complex. Okay. And there are guys and girls that were paying something like 25, 50% over what my bid was. Okay. And I'm telling you guys, when you're in, everybody says, well, you shouldn't really bid. Well, that's not the way. When you have a business, it doesn't work like that. Right. So it was very painful, because for 2 or 3 years, we purposefully shrank the footprint of our company. We purposefully did not engage in this orgy of speculation. And again, we made our mistakes. I don't want to say that, right? But what really put me over the edge was, man, we were selling our 70s, 80s, and 90s vintage assets for a higher value than new developed assets. Think about how stupid that sounds. This is like somebody selling you a used Toyota Camry for $300,000. It makes no sense. Like this deal I sold in Fayetteville was one of my best deals, Equinox at night. It closed, I think, in 22 or 21. The guy paid us $203,000 a unit. Okay.
Wow.
Well, it was an 89 vintage asset. And as much as I would like to tell you, I am the greatest operator, I'm God's gift to earth, I'm not, right? New vintage assets at that time were selling, and not too far away, by the way, similar submarkets. So we're not talking like different submarkets. We're selling between 160 and 180,000.
Damn.
So think about that. So when I started having that, I started selling as much of my assets as I could. And we moved to the upper Midwest, Sioux Falls, South Dakota, and surrounding areas, where we started actually developing a very different type of model. Now, you have to understand, we went from acquisitions to developments, but we had all of that experience, right? Now, if you're just a regular guy, you've got 2 jobs and you're a part-timer, you won't be able to do this pivot.
Yep.
But we pivoted really hard, really aggressively at a time when a lot of my peers, frankly, were doing way more deals. Right?
Yep.
And because we didn't participate in the speculation on the way up, this is why on the way down, we've really avoided a lot of landmines. Like big freaking time. We focused on getting fixed rate financing, lower leverage agency loans. I basically continued to beef up my operations team, because a lot of syndicators and these people you will see, they're all marketing, but they've got no people in operations.
Yep.
Or like one guy with a Band-Aid, right? I constantly started adding people, more and more and more people to my operations team. And that's what's really saved us and helped us prosper. And to give you some context, in just the last 2 years alone, apart from our developments, we've sourced and closed over 12 distressed deals for an institutional partner from all these syndicators that are in and around this world. 2,000 units, something like $175, $200 million of assets.
Wow.
Right? Because a lot of these guys are in trouble.
Yep. So really, I mean, when it comes to, chaos in the market or whatever, it separates the haves and have-nots, right? And so it seems like you guys separated yourselves. You were able to take advantage of it, right? People,
but you have themselves in bad deals. Yes, but you also have to understand, you have to really stay firm to your convictions for 2 or 3 years when every other seemingly intelligent person that and these are well-respected, intelligent people, they are doing things which are the exact opposite of what you're doing. So it's not, understand, it's not that easy, but you also know that, hey, I got to do the right thing. I got to do the right thing for my investors, for my employees, for my partners. And if you keep doing the right things, in the long term, you are rewarded. But in the short term, it's very painful.
Yeah. Nope, good for you. That's how you maintain integrity, right? That's the big thing. So I would imagine you have a fair amount of physicians that invest with you. Is that right?
Oh, yeah. We've got a whole bunch of physicians. Yeah. We've got a whole bunch of physicians that invest with us. So yeah, we are very familiar with all their woes, because I myself lived through that woe. Right. High income spouse, lots of money in taxes. We understand, you don't have time to make decisions. It's just, and especially after COVID, you're seeing what's happened.
Yep, absolutely. So yeah, so how do you talk to physicians? I'll tell you just from my experience, docs. A lot of docs need education more than anything else. It's multiple touch points for sure, and it's just educating. It's like I know the stock market. I know that's always going to go up. I've heard real estate's good, but I don't know enough about it. You know, they kind of hem haul and then they get a little scared. It's like, oh, this Iran war and the stock market's dipping. Like, do I pull back? And for me, I'm thinking that's the best time to be in real estate because you basically have fixed expenses. Inflation is going to only help boost revenue each year. And so I think real estate's the better play for that. Tax benefits, this, that, and the other. How do you explain it to doctors when they're unsure of what's going on?
Kyle, it's very similar, but I think what's really helping us also is that we are, number one, very active with regards to videos and just sharing my thoughts. And I always thought that, hey, as an example, you and I, when we met in Dallas as well, right? Mm-hmm. I just thought as an example that if you just freely share your thoughts, I mean, that's your view. There's no right or wrong, right? That's your view. Well, what's happened as a result over the years is that if you do it for 8 or 10 years, everybody thinks you're an overnight success after 10 years of hard work, right? So the consistency with which we put the same message out there for years on end, I think, it's education, but the message has been very consistent. Mm-hmm. And the message has always been, look, flashy people end up with flashy outcomes which are not congruent to what real wealth building is about.
Yep.
So anybody, anytime that tells you, hey, I've got this 30% IRR deal, or, oh, it's a guaranteed success, right? Or whatever word people use. We've had many investors that told us this in the upfront. And I was like, look, I can't guarantee you returns. I'm sorry. I'm not, A, it's illegal, and B, I don't have a crystal ball. Mm-hmm. Or, yeah, look, if you believe something has a 30% IRR, I believe you should do it. I personally wouldn't do it because, it's not like a magic money tree, right?
Yep.
So having the ability to educate people, but then turning money away. Somebody wants to give you money, but they're like, oh, you need to do this. And they're like, look, I honestly, genuinely, I can't do this thing for you now, right? Yep. That consistency of message over the years, I think, has been the real education. And then we're constantly reaching out. When people get on our email list, right? You can go to my website, you're on my email list. When they see that consistency of message and frankly, the unvarnished way that which we talk, like the way we're talking right now, I think that resonates with people more because people are so used to this edited, slick version where everything is perfect. There's nothing wrong. The guy has the right hair. He's in a Lamborghini. Yeah, we're just not that type of people, right? We've never been that type of people. And frankly, we will never be that type of person. But that also means that you attract or repel a certain type of person. Like, right. I'm not a flashy guy. So maybe I don't attract flashy investors.
Mm-hmm. It's not a bad thing. Again, from my personal experience, a few years back, probably 5 years ago now, we got into a deal, 36% return a year, 3% a month. And It was going very well for 6 months until finally we got the SEC website or SEC email saying it's a Ponzi scheme.
Whoa. Was that the ATM thing or whatever?
It was a medical marijuana company.
Holy crap. Okay.
Yeah, it was real estate. It was a real estate deal. But, and actually, the guy we trusted based out of Texas somewhere, he's kind of a big name in like the physician space, real estate space. We just trusted him, didn't know him personally at the time. Now I know him a lot better. But basically we trusted his due diligence and didn't do our own. And sure enough, everybody got burned. So
yeah, we're going to talk about this offline. I think I have an idea what you're talking about.
Yeah.
But, yeah.
Deal.
But I'm sorry to hear that you went through that, basically.
Yeah. Yeah. And it taught me a ton of lessons. Like, luckily we didn't put our whole, life savings in it, right? Like we got hit for sure. Like, it was not good, but we learned a lot of lessons through that. And we learned who to trust. It's people like you who've been in this business for a long time and are the operators. Like, invest in the operator more than the deal. And then the other point you made is you're not guaranteeing, 30+%. Like that. Usually there's a red flag when somebody starts over promising.
Yeah, look, that's what I believe. I've always believed that. But yeah, man, it's so surprising to me that so many seemingly sober, conservative members of society that you'd meet them. You're like, wow, that's a very down the fairway type guy, right? Mm-hmm. Or girl. They fall for this stuff. I guess if you're working 80, 90 hours a week or whatever it is, sometimes these things happen, right?
Yep, that's right. And it's like, and I used to believe at the time, it's like, oh, to get wealthy, to get out of this rat race, you got to hit home runs. And that's not the case. It's really, you got to be consistent year over year and just let that that compound interest take effect, it's get rich slowly, basically, right?
Yeah, look, I mean, the example I've given a lot of times is it's like working out. You don't go on the 1st of January, do all of your workout for the year and say, look, I'm good. Now I'm going to eat McDonald's for the rest of the year.
Mm-hmm.
Like, it's better to do, like, say, 10 minutes of exercise or 20 minutes of exercise, say 5 times a week, than to do 100 minutes in one day and then just not do anything at all.
Yep.
So it's not usually just the home runs. A lot of times I think investors grossly underestimate the bad things you didn't do. So the landmines you avoided, as an example. Because a lot of times if you just avoid the landmines and you're just even mediocre, man, you'll go way ahead, but you only realize in year 10 or 20 that you're ahead. And I'm living proof of that, because so many of my peers that were seemingly ahead of me, and I would scratch my head saying, like, how is this? Like, this guy can't even tie his shoelaces together, right? I mean, those people that were, say, what I thought were 2 or 3x higher than me, man, we have acquired deals from similar of those people where they couldn't even come up with $75,000 for a rate cap, and we acquired deals for cheap. So that tells you, I mean, it's a long run. It's a 10, 20, 30, 40-year game.
Mm-hmm.
It's not a 6-month or a year game.
Yep. Absolutely. So just, real quick, physicians, mostly physicians, I would say, listen to this podcast. There's, medical sales reps and all kinds of specialties, or professions. So it's not just physicians. But why do you think that real estate investing as a syndication, especially in multifamily, why is that a perfect investment for physicians, busy professionals, or anybody else as an LP?
Well, first of all, it's because of, again, before I say this, I just have to say this caveat. Do not let the tax tail wag the investment dog. This means that a lot of times real estate is sold as this great tax shelter, right? And then people just focus on the tax part. They don't focus on the real estate. And the joke I tell people is, look, if you want 100% write-off, why don't you give me all your money? I'll say you lost it. You are happy. I'm happy. And I got your money. But you understand it's a facetious comment, because you understand that's stupid. You don't want to do that. You want your money to make money.
Right.
So with that caveat aside, the reason why this is so powerful, guys, is once you figured out, okay, the right person, the right deal, whether it makes sense, it's a proper investment, then this icing on the top is kind of important. Because here's the thing, guys, y'all, like us, like Kyle, y'all are high income earners. There is no legitimate investment I know of, by the way, guys, that generates at a bare minimum 37% tax rate, because that's frankly, the tax bracket, marginal tax bracket you and I are in.
Mm-hmm.
Like, even if you don't have state income tax, like in Texas, if you're in the highest tax bracket federally, you are at a minimum for every new dollar you make, you are paying 37% of that to the government, not including state taxes. There is no legitimate investment on the planet. I don't even think drug dealers have these margins, okay, where you can generate 37%. So all the help and all the work and all the attributes that got you to this level of wealth, well, the game changes at each level. So you can't just work your way through this problem. Once you've made money, a totally new skill is understanding how to keep it.
Yep.
And at each level, the skill set changes, right? So what got you here isn't going to get you there. So understand the game and understand your biggest leakage is taxes, not necessarily the amount of hours you're working, because frankly, physicians are overworked anyways to begin with.
Mm-hmm.
So that's why it is so powerful.
Yep. I like that. Don't let the tax tail wag the dog, of course. Now, so there's, different ways to offset taxes. And, people always ask about, there's investments that you can buy. You could be a real estate investor if you want to like buy short-term rentals, or you want to buy long-term, all this, that, and the other. You really got to do your due diligence on that, because basically real estate is passive depreciation just inherently with the IRS, unless your wife can become a real estate professional status or something else. So with that being said, don't just go out and buy a bunch of long-term rentals, because you're probably not going to get the tax benefit you want. It's not going to offset your W-2. It's going to be a passive bucket loss. And so that's why I love syndications like what you're doing, Omar, because I don't have to do anything. I just hand my money to you. You know, you got to make sure you vet the operator, vet the company, but then hand the money over, let them do all the work, and you still get that tax benefit, which is the passive loss.
Think about it this way. If you're physicians, think about it this way. Because again, I'm saying this because my wife told me this, my uncle's doctors told me this. Think about it this way. You're a physician. If you've done a specialty, residency, whatever, you've spent close to a decade, if not more, just on your craft. Forget about the actual implementation of that craft, right? The academic knowledge, the hard work, all of that. Then you're with the patient. And the patient says, Google says, I have this disease. And then you're like, yeah, dude, it doesn't really work like that. You're not going to die. That's the equivalent, right? That a lot of times people say, well, why don't I do this? And I'm like, okay, well, number one, do you know how to do it? The answer is no. And I'm not saying, look, this is as hard as being a physician. I'm not saying that. But number one, A, do you know how to do it? B, do you even think it is possible for you to now fully commit to understanding it? And C, man, you are already overworked.
Right.
So now you want to add another job in which you're going to be possibly mediocre and lose all of your money in the process? That's the way you have to look at it. It's the same as, for instance, if you need your car oil changed, well, most guys can change their car oil, but it's just better to go to a car dealership and get your oil changed, right?
Mm-hmm.
Yeah, you pay that money, but you also saved yourself like your entire weekend, basically. So that's the way you got to look at it.
Oh, that's great. All right. Any final? Well, I have 4 last questions I like to finish with, but any final words about real estate investing? What you guys are doing at Boardwalk? Like, maybe let's get into what areas do you like? Where do you like to invest? Is there a certain location? Obviously, it's multifamily.
I can tell you. Again, I think the location part, everybody has to decide for themselves. For us, we are predominantly in the Southeast Sunbelt area and the upper Midwest. We feel the combination of laws, the combination of demographics, the incomes, and the business-friendly environment in these markets, they're a good fit for what we do. But obviously, that's not a comment for everyone. Everybody has to decide what their strategy is. We feel this is the right combination of items for us.
Yep. Very good. Yeah. What's some last bit of advice you have to physicians listening to this who are trying to figure out, where to invest some of their money?
Look, the only advice I give people all the time is do not even focus on the deal. I know this sounds counterintuitive because everybody's like, well, you're investing in the deal, right? Mm-hmm. If you have, say, an hour or 2 hours or 2 days or a month, spend 99% of your time doing due diligence, as much as you can, on the people you are working with, who are going to be working with your money. Because, guys, nobody can guarantee you an outcome. Okay? Tomorrow, if a 2008 level crisis, God forbid, happens, even the best operators on the planet are going to have losses. Focus on the quality of people you're working with. And I can tell you this from close to 2 decades of experience in investment management. Please, for the love of God, go with the most boring person you know. Boring beats exciting every single day. It doesn't matter what investment it is. Every person that in investment, anything that is exciting or any person that is flashy, 100% guarantee that you are going to find out the hard way that you've lost your money, whether it's in 6 months or 6 years.
I love that. Fantastic advice. And we first met, I met you and I met Miles at the Family Office Club meeting out in Beverly Hills. But, it's funny because Richard talks about that. He's like, some of the wealthiest people here, you wouldn't even know it. They're not the flashiest. They don't have the nicest car. Be careful of the guys that do have all that stuff. And then secondly, the keynote speaker was Meta World Peace, formerly known as Ron Artest, NBA player. And he said he used to invest in all this flashy stuff and realized that's not the way to go. He now invests in boring real estate or boring investments. He quoted by saying, that's the stuff that's consistent and it is steady and makes you money.
Yeah. Just quality of the character of the people you're investing with is 1, 2, and 3. Everything else is like a distant after that.
That's great advice. I love that. Well, good. Well, let's get into this. These last 4 questions here are pretty quick. What book are you reading right now?
I can tell you this. It's called Serpent on the Rock. I literally just found this out about, I think, of last weekend, because we're launching a fund through an institutional channel. And one of the intermediaries we met, he's an older guy. he basically was a whistleblower on this big scandal in the 80s and 90s. By the way, it's about real estate partnerships, but there was a lot of corruption in the system. So he was telling me about it, and I was like, you know what, MJ, I'm just going to order the book. Now, it's a huge book, but very fascinating read, Serpent on the Rock. So that's what I'm reading right now.
That's pretty cool. I'll check that one out.
Yeah.
What advice would you give to your 25-year-old self?
Moved to the U.S. Yesterday. That's the best, guys. I think people that are born and raised in the U.S., they don't realize how freaking awesome this country is. Okay. I've lived in multiple countries, guys. It's not like other countries aren't good. I'm not saying that. Canada's a beautiful, phenomenal country. Pakistan is great. UAE is a great, prosperous country. Okay. The amount of stuff you can actually do if you want to work hard, the amount of opportunities that are available in this country, it's like apples and oranges, man. It's like playing in the major leagues versus playing in your little league, man. This is hands down the greatest country on the planet. Okay, there is no 1, 2, and 3. It's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 on that list. The amount of opportunities available in this country are wild. I mean, it boggles the mind. This is the place to be, and that's the advice I would have given my 25-year-old self. That's
great. What is your personal definition of wealth?
I'm working on it because, look, I've got 2 young kids. So I think, look, I always thought that I was very money-driven. I am. I'm not going to lie to you. I am, like, as much as the next guy. But then my last job in investment banking, before I quit and started doing this, I realized, well, I'm not that money-driven. Because there were guys on their second divorce, and I was like, dude, I don't want to go through that. Like, I like my job. I don't like it that much, right? So I think I'm working on that definition because, like, look, like a lot of men, I'm 40. I guess that's middle-aged now, right? Is that middle-aged? It's sort of middle-aged.
Yeah, right? Yeah, we got a long way. We'll live to 110, right?
Hopefully, right? But I mean, conventionally, that's sort of middle-aged.
Yeah, middle-aged.
So especially when you have kids, you start asking yourself, eventually these questions start coming in your head. So I'm working on that. But look, my version of success also is, I should have money. I should be I am a primary breadwinner in my family. So, but that version of success, I think I will know on my deathbed is I have my kids turned out the right way. And again, some of that is you, some of that is on them, right? So you can't like have all of that. What was the quality of my relationships, in my marriage, my friends? These are non-financial metrics. Obviously, financial is average. So I'm working on that definition. But as I'm growing older, I'm trying to develop a more holistic version of like that success, whatever that means. And I'll find out in a few years, hopefully, I guess.
Yep. No, that's great. I love that because to your point, it's not financial necessarily. It's not a number, for you. I love that. I think a lot of guys can definitely empathize with that.
Yeah, and look, one aspect of this is health and taking care of yourself, your family, your neighborhood, your community, the schools your kids go to. Yep. I think it varies, and it should be varied. And just focusing on a financial number I don't think it's very healthy for a person, but it's also not very healthy for society.
Yep, agreed. All right, Proverbs 11:25 states, a generous person will prosper. Whoever refreshes others will be refreshed. If you could make one lasting impact by giving back, what would it be?
Man, I think charity begins at home. Number one, we are like, we tithe or donate like a significant portion of our wealth because we tithe on our wealth, not just on our income, which is significantly higher now. Wow. If I just went that way. But I think apart from that, right? Because that's something I think, it's money, but you're also in a way kind of doing it for yourself, I guess, hopefully, right? Because you're giving to others, but really you're the one getting the benefit, right?
Absolutely.
Right? But I think the real part of this would be if I can, hopefully my kids turn out to be responsible members of society and they contribute to society. And if that happens, I feel that would be a more lasting, bigger contribution than any money I could give out or any time I could spend. Because then okay, at least I've done my part for the next leg of this journey.
Absolutely.
Yeah.
I love that. No, that's so good. That's so good. And, and honestly, like with our third kid, I was, trying to spread myself too thin when it came to like charitable contributions. I was like, I want to go do prison ministry over here. And I want to go do this over here. And I want to give back. And my wife finally looked at me and she's like, your family is your ministry right now. And I was like, oh, that hit me hard.
And I think a lot of guys don't I mean, we realize it. Obviously, we know it. It's not like rocket science, right?
Mm-hmm.
But there's knowing, and then there's fully understanding.
Yep.
And I think we're all in between that chasm of knowing and fully understanding.
Mm-hmm.
We're all in a different stage. But full understanding of your house is your ministry first.
Yep.
If you don't do that, the rest of this stuff doesn't even matter.
That's right. Yep. And we've all seen the video, or we know somebody who's wealthy, older, maybe white hair, gray hair. And the one regret is they focus on making money and being successful more than their family, and it backfired on them.
I'll be honest with you. Again, I don't want to say something because, again, I have young kids, so I don't know how things are turning out, right? Brother, a big reason why we are having all of these conversations at home is because of the nature of what I do, with the luck God has bestowed on us. We meet a lot of people that are older than us, basically, and their kids are older. And some of them have absolutely crushed it. It's from the outside, at least. Their marriage is good. They make a lot of money, have a nice house, kids are great. But the vast majority of these people are people that live in, and I mean, in Dallas, we can see this everywhere, $10 million home. They take vacations on private jets.
Mm-hmm.
Brother, their kids are like 21, 18. And it's just lights out. Like, the kid has no motivation, no idea, and the kid is adrift. The parents are adrift.
Yep.
And it's like two ships sailing in the sea.
Yep. That's great. I mean, that's a deeper conversation than anything else we talked about, and that's probably the most impactful, honestly. And
these are, by the way, people who do not have a money issue. Money is the least of their problems.
Yep.
Money is literally falling from the sky for all intents and purposes.
Mm-hmm.
Yeah.
I love that. That's so good. Yeah. I mean, these kids are a legacy. There's no question, right? It's like, and the example that we have with our spouse is the example these kids will see, right? So it's like that spouse relationship goes first, relationship with the kids goes second, and everything else is beyond that. So
yeah,
great, man. Omar, I appreciate you. Thanks for coming on. We finally got this connected. Sorry about that. That's my fault for sure. But
you had a pretty good excuse. So
we had a good excuse. Yep. All's good now. We got the fourth kid, so we're good. But we appreciate your perspective on real estate, on just everything you guys are doing at Boardwalk Wealth, and how physicians can really understand this stuff. And how can physicians or anybody listening to this, how can they reach out to you?
Well, you can join my mailing list by going to boardwalkwealth.com. The form is right on the homepage, top or bottom. Or you can also email us at info@boardwalkwealth.com, and I or a member of my team will reach out to you.
Fantastic. And will I be seeing you at any of these Family Office Club meetings here soon?
I was talking to Richard. There's something going on in Dallas later on in April. Are you coming there?
No, I'm going to New York late May.
Okay.
It was
maybe I'll see you there because he was coming down. He just mentioned, so I thought, okay.
Yeah, but I know there's some like TED Talk type things going on in Dallas.
Okay.
There's some kind of like TED Talk type
we're
things.
going to bump into each other very soon, but I'll also have Lal reach out to you.
Absolutely. We love what you're doing. We appreciate you.
Thank you so much. Bye
All
for
right.
now. Bye.
This is my time. I'm on the rise. Can't hold me down. I'm too fly. This is my time.
Thanks for listening to the Doctors Investor Club podcast. I hope today's conversation inspired you to think bigger, dream bolder, and take the next step toward financial freedom. If you're a doctor or dentist and you're ready to join our community, head over to doctorsinvestorclub.com. There you'll find our free mobile app and private forum, built exclusively for physicians and dentists, featuring AI tools, curated investor resources, and live event access. And if you're at the stage where you want to see real estate opportunities we personally invest in, you can visit investwithdrkyle.com. There's no pressure, just transparency, education, and access when you're ready. Subscribe to the show, share it with a colleague, and remember, you're not just building wealth, you're building a legacy.
This is my time. Ready to shine, brighter than all of the lights. 'Cause when it's game time.